And Bankrate out with a new survey showing that cardholders are carrying more debt than ever before. Joining us now to talk about this rising debt are Ted Rossman, senior analyst with Bankrate.com, and Peter Boockvar of Bleakley Financial. He's also a CNBC contributor. Gentlemen, welcome. Ted, let me start with you and ask you to tell us what you found in your surveys of consumer debt. It seems to me that there are more people carrying more debt at higher rates. But is there any indication that they are having trouble carrying this higher debt, that they are more delinquent on the debt, that they are suffering because of it?
Well, thank goodness for the strong job market. That's really what's helping to keep people on track, because delinquencies have gone up a little bit, but not really to worrisome levels. They were artificially low during the pandemic because of stimulus. We're basically back to 2019 levels, which were still pretty low, historically speaking. Same thing with the debt-to-income ratio. Because wages have gone up, most people are keeping up. There's some trouble brewing in the subprime sector, though.
So higher debt, more people with higher rate debt, but it isn't but because incomes have gone up, and maybe because of some of the monies that were received through the pandemic, people are in a better position to handle it.
For the most part, yes. Now, there is still a big bite to this debt. The average credit card charges 20.5%.
That's up.
Most people are paying 5.25 points more now than they were a year and a half ago. So there's a cumulative effect to that. Credit has started tightening a bit, more at the lower end of the credit and income spectrum. For most people, credit is still flowing pretty freely, but it bears watching, especially if the job market were to take a turn for the worse. I think that's the big indicator.
Peter, you agree?
Yeah, those were all good points. And one thing also missing, it's not just affecting debt that's currently on consumer books, it's also affecting future behavior. Because if someone is going to debate whether they should buy that big ticket item, well, they need to calculate a much higher interest rate on that. So there also could be future purchases that are deferred with this high level of interest rates.
A lot of conversation, Ted, about the return or the required repayment of student loans. Mm-hmm. How big a factor is that going to be?
I think it's one of these all news is local kind of things. I don't think it'll do much to dent the overall economy because only about 1 in 6 households have student debt. But for those that do, that's another $400 or $500 a month that they're going to have to come up with that they haven't been used to paying. So does that lead directly or indirectly into more credit card debt? Credit card debt is the ultimate all news is local thing. Half of cardholders have it at an average interest rate over 20%. The other half, they're getting rewards and buyer protections and life is good. So it's a big difference.